So what tends to happen for especially long-term investors here is that they intend a particular allocation, a percentage of their portfolios to tech. And after rallies like this, where you have tech really dominating your portfolio, just because of the market increase, your portfolio has a higher percentage than what you really originally desired in tech. And so this is an opportunity to trim and rebalance. Here's an opportunity, maybe sell some of those names. You don't have to liquidate them, but sell a little bit of those names, put the cash to work in something that we think will have more persistence, more longevity, generate cash for dividends. We like energy here. It's been sold off. We like healthcare, and we like materials, normally as cyclical, but we think it's more of a value play right now. Those are the three sectors, especially for long-term investors, where we see value with a purpose.
How are you approaching the AI names, Paul? Because many have compared it to where the internet was 20 years ago or so. This is an inflection moment. It's going to be the next big thing. Does it feel like the premium is justified, or does it feel like a bubble?
Yeah, next big thing, I wouldn't call it a bubble, but these next big things, these disruptive technologies, if you want to use the technical term, typically have a period of breaking themselves into the economy, where the technology is there, people recognize the utility of it, but the technology hasn't really made its way into people's everyday lives. And until it does, you've got to expect some substitutes coming up, some competitors to the big seven that we've seen here do so well. They might be able to do things better. They might be able to do things cheaper. They might be able to do things faster than some of these new firms. And so it's probably best not to go chasing here, assuming that whoever's the dominant firm today will necessarily be the dominant firm in 10 years or even 5.
And just a quick line, Paul, if you can, on mega cap tech earnings, which are just around the corner next week, I believe. Is the E going to justify the P in some of those big names, or is it going to lead to a valuation re-rating, or is it going to be more fodder for the bulls?
Yeah, I think it'll probably end up being more fodder for the bulls, but really only because you've got 1 quarter's worth of data here. Investors, especially long-term investors, paying attention to many quarters into the future, can't yet really see with clarity how that earnings stream is going to develop over time. And it's also important to remember you've got to discount those future earnings against an interest rate, right? You've got the chance to do stocks or bonds today. If you do the stocks instead, what's the alternative? The bond price, and some of those bond prices still look kind of attractive to us. We're not sure that it's really the best thing to continue to pour every dollar into mega cap tech stocks when you've got an alternative sitting on the sidelines with maybe more security, better chances for income in the future. We would wait a little bit on investing beyond the market cap in these tech sectors and related sectors.